Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. So we're coming up on the end of a Sunday, January 22nd, 2023. It's 10 p.m., so let's take a look at the news. Now, last night, I told you about how less than half of North Americans do any real research before buying into crypto. And it kind of made younger investors look bad, like younger investors are impulsive or whatever. But maybe. But here's the other side of this story. Investor confidence is unfazed. Now, many people still want to invest in digital assets despite a bad market. A survey by eToro found that 69% of retail investors are positive or have mixed feelings about the market downturn. The other 31% are remaining cautious about investing after the crash. An expert from eToro, Ben Laidler, he believes that people with long-term investment plans see this as an opportunity to buy companies at lower prices, which can improve their long-term returns. So this report surveyed 10,000 retail investors from many different countries and found that the biggest reason so far for this renewed interest is people are less worried about inflation. The study found that at the end of Q3 last year, 24% of retail investors considered inflation to be the biggest risk to their investment. Many people are less worried about inflation and more worried about the global recession. As a result, they are adjusting their investment portfolios by keeping more cash and investing in defensive assets like healthcare and utilities. At the end of 2022, the number of people worried about inflation dropped to 19%, while the number of people worried about a global recession was 22%. And they found that younger people are less afraid of the crypto market than older people. A survey found that 76% of young investors between 18 and 34 feel positive or indifferent about the market downturn. Only 60% of older investors over the age of 55 feel the same way. The report also suggests that it's older investors with less time until retirement that feel more strained by the market downturn. Binance has warned its customers that there may be a problem with buying and selling crypto using bank transfers. Now, this problem may affect people in the United States who want to buy or sell less than $100,000 worth of crypto. That's right, less than. This starts on February 1st. So Binance sent out an email to its customers on January 21st to let them know that they may experience problems buying and selling crypto using bank transfers. Now, Binance is looking for a new partner to fix the problem to make sure it doesn't happen again in the future. But this isn't really Binance's fault, but the bank that they were working with. Now, other crypto exchanges may also be affected. Until Binance finds a new solution, customers may not be able to buy or sell cryptocurrencies worth less than $100,000 starting on February 1st. So if you're buying bulk, if you're buying more than 100 grand or so at a time, you're fine. But if you're using a bank transfer to buy less than $100,000 worth, you might be screwed. That said, customers can still buy and sell crypto using credit or debit cards, and they can still send and receive money from other exchanges. The problem only affects buying and selling using bank transfers. Binance also mentioned that buying and selling using bank transfers in other currencies like the euro will still be possible. The change also does not affect corporate accounts of Binance. And this whole mess is because of a decision made by the bank that Binance was working with, Signature Bank. And they know what they're doing. This is intentional. Signature Bank raised the minimum amount of transactions to $100,000 because they want to get out of working with the crypto market. So it wasn't Binance that made this decision. The Federal Home Loan Banks system is giving a lot of money to a couple of cryptocurrency banks to help them handle a lot of people withdrawing their money. And frankly, they need some liquidity to keep operating. This system is made up of 11 regional banks, and it helps other banks and lenders. It was started during a rough time in history to help with the housing problem, and now has a lot of assets and many members. Now, we were just talking about Signature Bank. They figure into this story too, because the Federal Home Loan Banks system gave almost $10 billion to Signature Bank in the last part of last year. This is one of the biggest loans a bank has gotten recently. Silvergate Bank also got money from the FHLB, receiving at least $3.6 billion. Silvergate was hemorrhaging money and had to sell debt securities to keep enough cash. The company lost $1 billion in that time. Silvergate's report shows the average amount of money that customers put into the crypto asset market in the last part of last year was $7.3 billion. This is considerably less compared to the previous quarter when the amount was $12 billion. The report also states that traditional finance has not been affected by the problems in the crypto market, but giving loans to banks involved in the crypto market could change that. Remember, we were just talking about Signature Bank and how they're trying to get out of the crypto market? This might be part of why. Now, Senator Elizabeth Warren said that she's been warning people about the risks of connecting to the bank system with cryptocurrency. She believes that taxpayers should not have to pay for problems in the crypto market, which she claims is full of fraud, illegal money, and illegal finance. Genesis Global Holdco filed for bankruptcy protection, and as a result, we found out that they owe a lot of money to a lot of people, including a pension fund. The bankruptcy filing of Genesis Global Holdco revealed that several creditors, including a fund from Van Eck, had claims against the company. This fund specializes in lending to crypto asset companies for high returns. Last year, Fairfax County's pension system invested in this fund as part of a yield strategy, which also included an investment from Parataxis Capital. The Fairfax County Police Officers Retirement System, led by Catherine Molnar, has invested in the crypto industry since 2019. This is unique and an uncommon step for pension funds. They have previously made a $50 million commitment in a fund managed by Morgan Creek Capital. Cryptocurrency revenue taken by ransomware attackers decreased a lot last year, and that decrease was 40.3%, which means it went from $765.6 million to $456.8 million. That's a clear trend, as Chainalysis explained in a new report. However, the real numbers could be even higher because many crypto addresses controlled by attackers have not been found on blockchain networks yet. Unfortunately, even though revenue decreased, there's still a lot of attempted attacks. Cybersecurity company Fortinet found that more than 10,000 different types of ransomware in the first half of 2022. That's almost double the amount from the previous 6 months. Data also shows that the number of active types of ransomware has increased a lot in recent years. However, the average lifespan of each type of ransomware decreased by more than half to 70 days in 2022 because attackers were trying to hide their activities by using many different types. And even though there are many different types of ransomware, Chainalysis said that there are probably not a lot of people behind it. That's because some people are responsible for multiple types of ransomware. And that makes it look like there are many different attackers, even though they're all using the same wallet addresses. Chainalysis said that the main reason for the decrease in payments may be that victims are just refusing to pay. On the money laundering front, Chainalysis said that most of the attackers are sending the victim funds to mainstream centralized crypto exchanges. This year, 48.3% of the ransom funds were sent to these exchanges, while last year it was 39.3%. On the other hand, the share sent to high-risk exchanges decreased to 6.7% from 10.9%. Additionally, the use of illicit services such as darknet markets for money laundering has also decreased, while the use of crypto mixers such as Tornado Cash has increased from 11.6% to 15%. So in Davos, the International Monetary Fund revealed that it wants stricter rules for the cryptocurrency industry. This includes licensing and registration for companies that handle digital assets. So they suggest regulations similar to traditional financial institutions, including the separation of customer assets and clear oversight. The IMF wants more control over the different types of cryptocurrency companies, including those that handle multiple functions. They suggest more oversight and regulations to prevent conflicts of interest and to ensure transparency. They also want stricter rules for stablecoin issuers, who they claim could harm financial stability if not properly regulated. They recommend regulations similar to those in the banking sector for major stablecoins. The IMF wants traditional financial institutions to be aware of the risks of dealing with cryptocurrency. They also want a strong global framework for regulating and supervising the cryptocurrency industry. They claim that because crypto is borderless, national authorities alone cannot effectively regulate it and that a unified approach is necessary. Okay, well, that's true. It's important to note that IMF's suggestions for regulating the crypto industry are just suggestions. The crypto world is relatively unregulated, and there is currently no agreement on how a global regulatory framework could be established or implemented. Mayor Francisco Suarez of Miami continues to receive his salary in Bitcoin and believes it to be a good investment. Despite the recent decline in the value of Bitcoin, he remains confident in the cryptocurrency. He doesn't seem to be bothered by the IMF and their negative stance on crypto. He said, quote, "You have to understand that I get paid every 2 weeks, so it's not like I bought it all at 60 and now it's at 20. So sometimes people misunderstand that you're buying it every 2 weeks or you're buying it in fluctuations. So actually, since I bought it or since I started taking my salary in Bitcoin, my salary is actually up. So it's actually been a good investment, not that I'm trading on it." Mayor Suarez began accepting Bitcoin as payment for his salary in late 2021. He was also asked about his decision to support the U.S. arm of FTX. Despite FTX's failure, he remains positive about the potential of crypto in the future. Additionally, he doesn't seem to be affected by the negative opinion of the International Monetary Fund. That said, he expressed regret over the actions of FTX and believes that a lack of proper government regulation played a role in their failure. He believes that regulations are necessary to protect customers' money, and he wishes that the firm had been more responsible with it. He is critical of the IMF's negative stance on crypto and believes in the potential of crypto firms with proper regulation. The mayor expresses regret that investors in FTX were not given more information about the firm's actions. He believes that even the most experienced investors were misled by the firm's fraudulent behavior, which was difficult to detect without proper knowledge. He is critical of the IMF's negative stance on crypto and believes in the potential of crypto with proper regulation. A minister from India said that using crypto is allowed as long as it follows the rules. This statement came shortly before the annual budget, suggesting that the government may not enforce strict regulations on crypto. It is a radical change from the Reserve Bank of India's previous ban on crypto in 2018 and their reluctance to fully support the sector, even after a court overturned the ban in 2022. Now, they said that using crypto is not illegal as long as it follows the legal process. He made this statement at an event on Thursday, and it's important because the Indian government will be announcing their annual budget on February 1st. Crypto exchanges and investors in India are hoping for some relief from regulations such as the high tax and the lack of banking services in government's annual budget proposal. These proposals will take effect on April 1st after being discussed in Parliament. The CEO of one crypto exchange suggested a lower tax rate of 0.01% to help Indian businesses compete with foreign exchanges as well as to protect users from exposure to unregulated markets. That's one of the problems that they have is with these high taxes, they've got people going to unregulated markets outside of India where the Indian government can't do anything. Now, previously, the governor of the Reserve Bank of India said that cryptocurrencies have no value and are similar to gambling. He also expressed concern that they could cause a global financial crisis if regulated. However, a study by Nansen found that India has a huge number of people working in Web3 and accounts for 11% of the global workforce. The study also showed that many Web3 startups are registered in other countries because of the unfavorable regulations in India. Data suggests that 7% of Indians own or have used crypto. Currently, the main issue for the Indian crypto industry is the high tax rate of 1% on transactions and 30% on gains from crypto transactions. The government's stated reason for this high tax rate was to keep track of all crypto transactions for tax purposes. However, some in the crypto industry argue that the lower tax rate would still achieve this goal. High taxes and strict regulations have caused many startups to move to other countries with more favorable regulations, such as Singapore and Dubai. It is expected that the government may relax these taxes in order to encourage innovation in the blockchain field. Indian tax officials have collected around $7.4 million in taxes from cryptocurrency transactions from July to mid-December. This low amount of taxes collected is being used as evidence to support the argument for reducing the transaction tax, which is currently seen as too high and restrictive. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.